Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have back with us Brendon Murphy, who's the CEO and President of Compass Financial Solutions, and we'll be talking about financial teamwork. Brendon, welcome back to the program.
Mike, thanks for having me again.
Hey, so I think this is really a powerful concept because nowhere in the world is any one person an expert in everything. And I think that if you have someone that positions themselves that way, you should be really, really wary, because someone in your position that is in financial services, there are so many nuances that you personally don't know. So now we're going to talk about bringing that financial team together. So talk a little bit about your holistic approach to financial advising.
Yeah, so Mike, I do personal pensions, I do long-term care, and I do life insurance, right? Those are the three areas I focus on. That's my niche or niche, however you like to say it. Mm-hmm. Well, everyone doesn't just need always need an annuity, life insurance, or long-term care, right? So they need a certified financial planner or someone who's going to help, manage their money, right? Mm-hmm. I like to partner with certified financial planners that become part of their team. Because if you're in a 70-30 portfolio, 30% of that's fixed income. Well, that might not be what you need, because that still bounces up and down with the market, right? That's risky. My products, I can say the word guaranteed. People can't. Other financial advisors can't. So when we start dealing with people who are getting ready to retire and they need some kind of guarantees in their portfolio because they're about to retire and need those distributions for income, that's where I come in. So I partner with financial advisors and certified financial planners that don't do what I do. I stay away. Like we use accountants as part of our team. We use estate lawyers as part of our team. I'm a big fan of everyone plays a role. It's like working at a restaurant. If you love your bartender, but the bartender has to put the order in, somebody has to cook it, somebody has to bring it to you, and somebody has to clear your plate, right? So I look at it as like that. We're a team. Whether you have your own team and we become part of it, or we bring the team to you if you don't have them.
Yeah, I think that's a big point that you bring up there, because sometimes people might be like, yeah, but I've got my guy, I've got my gal who, whatever, is the CPA. I don't want to have to go to Brendon's whole team and start fresh. And what you are saying is wherever there's needs and opportunities and gaps, you fill it in because you've got your set of trusted advisors on the team. But if you got a CPA, wonderful. We'll integrate them right in with what we're doing so that they know the plan and that everybody's on the same page.
Listen, Mike, we want to say, excuse me, Mr. and Mrs. Client, would you mind giving us the name of your CPA? And would you let them know that we'd like to reach out? Because if we make recommendations for some type of Roth conversion, or we're going to move some money over to do long-term care, we want to make sure that it doesn't hit your tax bill. And then he's calling us and going, what did you do? So yes, if you have an accountant and you have an estate docs, which is something we check off in the box, which we talked about before, hey, would you mind providing us those documents? And then two, would you provide us the name of your estate lawyer? Because now if we become part of your team, we want to work with those people and make sure that we're hitting all the your points of how you want to retire and all of the conversations that need to be had, and making sure that your beneficiaries are set up exactly how the estate lawyer has them when we set up your new accounts, if we do that.
This to me sounds like everybody is staying in their lane. They can stay up to date on the latest trends. Like you said, you're not a CFP. You focus on what you focus on, private pensions and insurance and annuities. Well, you don't need to know all of the intricacies of what a certified financial planner does. Well, that keeps you focused and being an expert in your lane. So talk a little bit about how that approach is different than a more traditional approach that, people tend to see on TV and online. Come to us, we'll help you plan for retirement. What you do different than what they see out there?
Because I'm going to bring in the certified financial planner, and we're going to say, hey, if you have a 70-30 portfolio, but you're going to be short income when you retire, some piece of that fixed income bucket could be used in say a fixed index annuity with a lifetime income rider, right? That'll help you, give you guaranteed a pension payment for the rest of your life, just like your Social Security, for the people that are the age that are going to receive it. And because the three-legged stool used to be pension, Social Security, And I just lost it. I just lost it. Social Security, pension, and investments. Now we could say, here's your, because no one has pensions anymore, not a lot of people, unless you're in the government or certain industries.
Yeah.
We can help turn that annuity into your pension stream on top of Social Security. And now your fixed bucket is truly fixed, and that income you can't outlive. So we do that, where we'll talk to you and say, hey, you have a financial advisor. Has he brought this to the table? And then I'll go to that financial advisor and say, hey, sir, they're asking me about this, guaranteed income for life. How can I help you help that? Right? Because you're working for that client. I want to work for that client too. But it's usually a struggle when you're going in between them. I just want to come right forward and say, sir, I can help you help your client.
And you should never have all your eggs in one basket. We've heard that before, like don't have all of your money in the market. Don't have all of your money, in different places. And there's definitely a time and place for having your money in the market, maybe in your 20s, 30s. But all of a sudden now when you start seeing a little bit on the horizon, like let's plan for retirement, now you need to start, getting safe and protected and guarantees. And I love how you said you can say the word guarantee and other advisors can't because, they can't control the market. But when you put people in a certain product, now we can talk about streams of income and guarantee. Here's a big question that I feel like is important for people to understand. You're not trying to fit a square peg in a round hole and go, everybody needs boom, this next. How do you go about understanding a client's entire financial and personal picture to make sure that the recommendations you're making are perfectly fit for them?
Well, what we do is we have conversations. Our first meeting is a conversation. Right? You don't have to bring anything. We don't need your financial statements. We don't need anything. We just want to talk to you. We want to talk to you. We want to find out what's going on right now. Where are your goals? Where are your dreams? What do you want to do? And then kind of get the big picture and say, okay, well, we think that this could help you or not help you, right? Hey, you have this already. Let's focus over here because this part is already done, buttoned up. You have an estate plan. Great, check. Can we just see the documents so we make sure the beneficiaries, if we do decide to do something, we can line them up with what your estate docs do. Are you using the accountant? Are you doing TurboTax by yourself? Hey, maybe in this bracket where you are, you should be having someone personally do it and not you, even though you like doing it, but you can work with the accountant. Maybe it'll save you some money at the end of the day. So we'll look at that and have that conversation. Hey, this is what we think we can bring. Then our next meeting, we'll say, we're going to ask you to bring some stuff in for the conversation and we'll go through the bits and pieces and put it all together. Whether it's a budget, whether we're looking at the 401k, you have a pension plan that you can roll out a lump sum. If you're a teacher, sometimes those teacher pensions are underfunded, so you roll that out. You have those conversations along the way, and then we'll come back to you and give you a one-page plan. Hey, this is what we saw. Here's where we think we can be helpful. Or, hey guys, you guys are doing a great job. You only really need these things, and that's not in our wheelhouse. We're going to send you over here. That's how we operate on a daily basis.
That's great. And you've talked a lot about some of the benefits of working in this holistic approach. Can you think of an example of a client maybe you've worked with that was not used to that and came from like the traditional, advisor with the blinders on going, here's this. And then when you come on board and start showing them all of this, their eyes kind of opened up to go, wow, we've been missing out.
Yeah, we just had a client come over and they were in a situation where they didn't have any money in the beginning of life. They have money now. Okay. And the advisor wasn't listening to what they were asking for. And they really just needed income. They had money because they got a lump sum, but they needed income to live their daily life. He just put it all into the market. And every once in a while they'd be like, yeah, can I get 30 grand? Can I get 40 grand? Well, I'm like, hey guys, what if we just get you income and stabilize it? Let that money run with your advisor over there. And then we'll start checking boxes along the way. And we did that. We moved some of the money into some fixed income, which they're getting monthly, which they love. We got the wife a long-term care plan because the husband was unable to do it, but we provided him with an annuity with ADL benefits on top of that. So now they're all protected and the money is growing. And they've been part of the ride along. So most of the money that we moved to protect them has already been made back with the interest that's going on. So for us,
can you remember what percentage of their overall portfolio that was in the market? What percent is still in the market versus what percent you have in some of those solutions.
So they were in a 90-10, and we ended up moving about 30% over to
Okay.
protect it.
And the
So
reason I ask that is a lot of times people are like, oh, well, now I've got to, turn my back on what I've been doing for decades. Well, no, you're not saying to stop all of that. You just reposition.
yeah, you're repositioning. So if you look at an overall portfolio, right? We're talking to somebody and say they have $1 million, right? Let's just say they have $1 million. We'll look, if you're in an 80-20 portfolio and that's what you're comfortable in, right?
Mm-hmm.
We could roll over your fixed income at the 20% to the fixed annuity, guaranteed that you can't lose any principal. You gain when the market's up, but your equities can stay in an 80-20 portfolio, or you can go to 100% equities because we have the 20% guaranteed, right? So you can fluctuate between that if you wanted to.
Yeah. Have you ever had a client that did that and that they come back to you? Because I'm just hearing that, thinking out loud, that here comes a client that goes, wait a minute, I'm 2 years into this new plan you put me in, and we are so tired of kind of holding our breath, watching the news and see what the market's doing, opening our portfolio statements, going, oops, the market took a little bit of a dip, and we love this guarantee. This, have you ever had them come back and go, why don't we kind of adjust the percentages a little bit more and put a little bit more into the protected guarantee side?
Yeah, we just had somebody do this. It was a client we picked up 2 years ago. They were kind of like that, 65-35. And then after this year, he came back and goes, listen, he's like, I think I got to put another 10% in the fixed. He's like, I'm worried about, what's going to happen in the next little while.
Yeah.
So we just adjust it, right? Because it's still in the market. We can move some of that money, right over and protect it. And then we just go to a shorter time frame, which stays in their horizon. Maybe we're not doing a 7-year contract. We're only doing a 5, right? In the annuity space. So it kind of still aligns with where we are ladder-wise, right? Because you're on the income ladder. When are we going to start taking distributions from everything to make sure that we can live in our own world, right? When you retire.
And you're not making recommendations to weird investments and hoping for the best. You're making recommendations to things that have been out there for hundreds of years, and you're not making them do a 180-degree turn. You're just going, let's just kind of reposition a little here and a little bit there. And I would venture to say that approach builds tremendous trust with your clients over time, right?
It has, yes. And people like the fact that maybe you get 2 different people working, so they can bounce ideas off 2 different people. Because what if one person doesn't like long-term care? They're just going to say, you can afford to pay for it, right?
Yeah.
Or, we'll just take the distributions from your account. Well, what if the market drops 40-50% like it did in 2008, and you're taking $40,000 from that $1 million account, right? It's doesn't work. Like, you just lost 90 grand. You just took 90 grand out in a year. And it took you 6 years to get back to where it was. So you're continuing to take that 40 grand. But what if we guaranteed it? What if we guaranteed you that 40,000 per year for life? And even if the market goes down, you can wait for it to go back up because you have your income, right? Or when the market's up, you take from your investment accounts. And when the market's down, you pull from the annuity because the annuity is guaranteed, right?
Yeah.
So you can take from, we use that system sometimes where if the market's up, you're going to pull from the market. And if the market's down, you're going to pull from the annuity. So you have time to rebalance in the markets.
Yeah.
So it gives you have flexibility.
Yeah. That's big. When you were thinking about, the team, the financial team that you're bringing to people's attention, is there a time that you have a client that goes, wow, I never thought about including this financial member part of the team. I never thought I could have access to someone like that. So can you think of that example that you've had people go, wow, I kind of feel like a big shot because I've got all of these. And what's a member of the financial team that sometimes people think, wow, I hadn't thought about adding that in and making sure that's part of my financial team.
I think that a lot of times it's the estate plan. I think people think they're gonna go online and write a will and then that's going to be the end of it. Well, they didn't really think about what happens when somebody passes away. I mean, more and more these days, younger people are dying from heart attack, stroke, cancer, right? And they don't think about it. They don't think about protecting it. They don't think about life insurance for those things, how life insurance can go in a trust to take care of the kids later on in life that you set up with the estate plan to make sure that, God forbid, something happens to them, something's left to the kids. If something happened to both the adults, those plans, like God forbid something happens to both of them, where do the kids go? Who takes your kids?
Yeah.
Right? Because if your parents are in their 70s and 80s, should they really be watching a 5 and 6-year-old all the time? Maybe not. Right?
Yeah.
So those plans, I think the estate plan is a thing where not a lot of people think about all the time. And to spend, whatever, $500 for a will or, something in that range, you're gonna pay a couple dollars for it, but at the end of the day, it's protection. It's protection on your assets, your family, and everyone else that's under you that you're responsible for, really.
And I think, too, when you think about that estate planning professional part of the team, that it shifts from striving and grinding and building and growing into, that part of the age before you get to retirement into the next stage of, let's protect what I've got. And then really, I think a lot of times people might not think of the very next stage, which is the legacy planning, which is passing money on to your heirs. They almost think about, I'm going to need every dime of X number of dollars so that I can get to retirement. Well, why don't we think about how many millions we can have left over past what we need so I can give it to my kids, but mainly give it to my family in the right possible way so that it's in the best, tax, advantages. So talk a little bit about even just that mindset.
Yeah. So we talk to clients a lot about gifting when it's available, when they have money, and maybe into life insurance policies for their kids, right? Hey, you're gonna put this money in for 5 to 10 years. And you're going to have a paid up life insurance policy for your kids that they can use that cash value to buy whatever they want or to pay for your grandkids' college. And we can do that as well, as long as they're gifting it up to their limits, right? We do that. Or, they have life insurance, so they can spend all the money they want, spend all their money, and they're still leaving something to the kids. We just make sure that we hear that in the conversation. Hey, you know what? I wasn't thinking about it at the time, but now I'm thinking about, little Johnny and Janie. They have college coming up. How can we do something for them now? And what if they don't go to college? Is the 529 the best? Yes, it's a great vehicle, but maybe that's not for you right now, right? Because you're a little bit older. It could be, but we use 529, we use life insurance. We can use different vehicles to make sure that all the parents are leaving legacies for their kids and for their grandkids.
Yeah, huge. Well, I think this is just really eye-opening to think, you know what, I thought you had to have $200 gazillion to have a team like this working for you, but you don't need anything like that. You just need to work with someone like yourself that brings a team together for you to make sure that every single decision is the right one for now, for the future, for how you pass money along. So I think this has just been super helpful. Brendon, if someone is interested in learning more and reaching out and connecting with you, what's the best way they can do that?
You can reach us at 610-449-9900. That's our office. We're on the Compass Wealth podcast on iHeart and Spotify, and then our website, mycfsi.com.
Excellent. Well, thank you so much for coming back on. It's been a real pleasure talking with you.
You also, Mike. I really appreciate you having me on again.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.